Who is there? Shweta, are you there? Harshil Patel?
Yes, sir.
Okay, so we start now. Fine. Zubain, have you come back?
Yes, sir. I'm here.
Okay, so please open this file, and if there is something there on the to complete, I mean, clear the all the data on the top part of it. Have you all done? Okay. So what is the purpose of this exercise? First of all, we are going to understand that. Whenever the company is issuing shares for the first time through an IPO or through an FPO, the company needs to, decide about the price of the share price of the company, okay, at what they are going to offer to the public, okay. So, so they seek the help of the merchant bankers for that purpose. So there are two mechanisms through which, we can value a company. First is called the intrinsic valuation, which is called the DCF technique, which is more scientific and give you the true value of the company. The second mechanism is called the relative valuation, and where we look at the share prices of the companies which are prevailing on the stock exchange. So it is a pricing mechanism and not a valuing mechanism, because the prices can be overpriced or underpriced, because the markets make mistakes. When people say, the analysts always say the markets are never at a right valuation, so either the prices are very high or the prices are very low. So, but still, you would like to, find out what are these prices and how do they compare with the other companies. Okay. So the relative valuation is a mechanism which has been used in pricing the shares by the merchant bankers, apart from the intrinsic valuation. So let's understand this mechanism. Okay. So, you have to choose company. Okay, fine. So what I have chosen, Aisha Motors, Maruti Suzuki, Tata Motors, Mahindra and Mahindra, Ashok Leyland. Now tell me, Zubain, what is the common in these companies? Are they in the same industry or for different industry?
So they're all auto manufacturers.
All auto manufacturing. So now the purpose is that we are looking at all the companies which are in a similar kind of a industry or doing a similar kind of business. But what we look at each of the company, they are maybe Maruti Suzuki and Tata Motors, to some extent they can be comparable, but the companies cannot be just compared on the basis of what industry they are. But still we follow some mechanism and we say that these companies look comparable. Like Maruti Suzuki is basically in passenger cars, and Tata Motors is in both in passenger as well as commercial vehicles. Okay, so they have different businesses, though they cannot be said that they are, I mean, completely comparable. But still, we can make some inferences from their prices. So first, I'm going to put a price here. Okay, what is the Aisha Motors price? So I'm going to go to the screener. Okay, so just open a screener. Okay, and open the file, the screener. Are you able to see that this thing also? Are you able to see what I'm doing?
Yes, sir.
So go to Aisha Motors, pick up Aisha Motors. Okay. So the screen is there. What is the current price of Aisha Motors as per the screener? Which is written top here, 3428. Are you able to see that? Okay. So it is 3428. So I'm just going to put this number here. 3000. What was the number? Just let me check again. 3428. So 3428. So please enter the number. Okay. Fine. And then I'll just see whether the recording is on. Yes, recording is on. So then I'm going to put the market cap of Aisha Motors. So keep doing it along with me. Okay. So we go to the market cap, and the market cap is how much? 93,841. So I'm just going to put this number here. I can even copy paste. Okay. 93,841. 93,841. Okay. So this is the market cap. You know, all of you know what is a market cap? Anybody who doesn't know what is market cap? So if I don't hear anything, I'll presume that you all know what is a market cap. Market cap is again basically the total number of shares issued by the company multiplied by the current price. So this is if you want to buy, 100% shares of Eicher Motors, then you have to pay 93,841 crores. Okay. Then we come to enterprise value. Okay. So what is enterprise value? Any idea? Zubain, anyone? What is enterprise value?
Sir, equity value plus debt value minus cash.
So we just go to the slide here, okay, and if I just log in, then I'll get all the numbers because I have already put them. So Aisha Motors. So I put them here. That enterprise value is 93,273. Okay. So I'm just going to put this number first and then tell you how this number has been arrived. 93,000. What is the number? 93,273. 273. Okay. So this is the enterprise value which I put. Now, how do we calculate the enterprise value? As Zubin said. So what I'm going to do, I'm just make the calculator on. Okay. And then I'm going to take the market cap first, which is 93,841. So 93,841, okay, plus the debt. Okay, for that I have to go to the balance sheet. Okay, go to the debt, borrowings. Borrowings is how much? 288. So I'm going to add 288 to this, plus 288 is equal to, and then I'm going to minus cash. So I have to go to the cash balance, see that what is the cash balance, other assets. So cash equivalent is how much? 857. Okay, minus 857 minus, okay, so minus 857. So you will get the same number. Okay, fine, I've just lost the track. I'm just going to do again. Okay, are you getting the number? So Eicher Motors 93,841, 93,841 plus the debt, which was 288 minus the cash, which was somewhere 800. What is the cash, Zubin? Cash is
857, I think.
857 minus 857. 857. So I get 93,272. And what number I have put here? 93,002, the same number almost, okay? Fine. 272. 93,272. Okay, so almost the same number. Okay, fine. So enterprise value is how much? Enterprise value is basically the market cap plus the market value of the debt minus the cash. Okay, so that's a formula. But what does enterprise value means actually? Anyone? So, Zubain, do you know what is the significance of enterprise value?
So the total value of the firm and all its equity and debt.
Okay, so value of the firm is basically the formula is the market value of debt plus the market value of equity. Okay, so that is the value of the firm. But the enterprise value we minus the cash. Okay, fine. So it is basically, if you want to understand in a layman's, it is roughly the market value of all the operating assets of the company. Okay. Now, why we minus cash? Because cash is idle asset, so it is not an operating asset because the company would have put it some form of treasury instruments like a fixed deposit or some kind of investment. So this is not contributing to the business of the company for producing goods and services. So we minus cash. So it is the market value of the market value of the operating assets of the company. Okay, fine. It is a market value of the operating assets of the company. So it is generally used in mergers and acquisitions because when another company wants to buy another company, so they want to know what is the enterprise value, what is the company worth today. Okay, I mean, what are the assets worth today? Okay, they are 93,273. Okay, then we put the sales. Okay, so we go to the screener again and go to the profit loss account and go to sales and we pick up the TTM sales 15,031. Okay, so 15,031. 15,031. Is that okay? Is this 15,031? Yeah. So pick up the TTM sales. Okay, fine. And then EBITDA. So EBITDA is earning before interest, tax, depreciation, and amortization. So we all know that. Okay. So it's a operating profit of the company. That means the profit of the company, how much cash, it's proxy to cash basically, how much cash the company has earned during the year. Okay. It's a very important number for any company, EBITDA. So we go to the site again and go to the profit loss account and pick up the number. So number would be basically the 363 this thing and other income, other normal income. Okay, so other normal income is how much? So other normal income, the bifurcation is not given, so we'll presume that this is the normal income. So 3633 plus 1171, so that will be called EBITDA. 3633 plus the normal income, the income which the company is earning, in the normal business. So if we add it, so we get, EBITDA. EBITDA is basically the operating profit of the company, which means that profit which the company is earning by selling their goods and services to the consumers. So it's an operating profit. And apart from the operating profit for selling goods and services, they're also they're also making some other income, which is regular in nature. Okay. So if we add that, so it will give you EBITDA 4,804. So I'm going to put this number 4,804. Fine. So this is EBITDA. If anybody has a question, please ask me at this stage. Okay. Then we come to EBIT. Okay. So I'll do it for first line and then you can do it for the other companies. Okay. Fine. So then we go to, again to this thing, we have to calculate EBIT. So EBIT is basically the profit before tax. This profit is given and we are going to just add interest. Okay. So this will be the profit before interest and tax, which is called EBIT. Okay. So 4219 plus 33. 4219 plus 33. Sorry. 4219 plus 33. Okay, so I can just simply copy this and put the number there. So EBIT is here. Okay. Then the earnings. Okay, that means the net profit of the company. So which is given already to us. The net profit is how much? 322. If I'm doing something wrong, please let me know. So I'm just going to put this the net profit of the company. So total earnings of the company. So I'm just going to go back to my slide, earnings, and put it here. Okay, and then okay, is that okay? Have you done, all of you?
Yes, sir.
Okay, then we come to this first ratio, the valuation ratio, which is price to sales. So I just pick up the price. I'll pick up the market cap, not this price, but market cap, and divide by sales. Divided by sales. So this comes to 6.24. Okay. So that means company is today trading at a multiple of 6.24 times than its sales. Company's price is greater than 6.24 times than its sales, price to sales. Okay. So that means, if the company is making a sales of 15,000 crores and the market cap is 93,000, okay, so how many times the company is trading above its, sales? It is 6.24. Okay, so we can even check this going forward here. So price to sales, should be given here. Price to sales. Are you finding where some price to sales is given somewhere? Price to sales, 6.24. Okay. So the screener is also confirming that the price to sale is 6.24, and we also calculated the same way. Okay. Fine. If you have any questions, please, if you're not asking any question, I'll assume that you're understanding everything. Okay. Fine. So if this price to sale for a company which is low, then it is good. When suppose it was trading, say, at 6.24, suppose it would have been trading at, say, in past at, say, around 7. So today it is underpriced compared to its past. Okay. Suppose in the last year or maybe a few months back, this was, close below 6. So that means the price of the company has moved up. So company has become more expensive. So either the company is expensive or the company is cheap. So we look at historically how Eicher Motor has been trading. So it can be either trading at discounts to its past, or it can be trading at premium to its past. Okay, if it was trading at 7 times a month back, today it is trading at 6.24 times. It is cheaper. Okay, fine. So that is one way of looking at. Then of course there is another way of looking at to compare with the industry. So we'll do that. Once we finish all the data. So EV upon sales. So here I am going to put EV, enterprise value, upon sales. So it is 6.2. Now we have calculated two ratios. Okay, enterprise to sales and price to sales. And just let us check whether we are getting the same number for the screener. Price to sales is 6.24 and enterprise value to sales is also 6.21. Okay, so it's matching. So, which one is a better ratio according to you? Which is a better, metrics for knowing the right valuation? Is it price to sales or is it EV to sales? If you have to decide, which, you have to choose any one ratio to understand how the share is valued. Which one you will go for? Price to sales or EV to sales? Any idea? No idea. Okay, now, in each, ratio, there is a numerator and a denominator. So in the first case, price to sales, the numerator is market cap and the sales is the denominator. Okay. In the second case, it is the numerator is enterprise value and sale is the denominator. Now, when we are doing sales, okay, now both the numerator and denominator should be consistent. Okay. Now the EV to sales is a more consistent, metric, because you are doing sales by using all the operating assets of the company, which is nothing but the enterprise value. So it is numerator and denominator are consistent. They are capturing the same, domain. That means the enterprise value is all the assets of the company, and sales is also by using all the assets of the company. So numerator and denominator looks to be very consistent. But in case of price to sales, okay, where we are using the market cap, so that means the money which belongs to the shareholder or the share price of the company, of the market cap of the company, is reflecting only the shareholders' money. Okay, but we are taking sales, which is representing whole of the company. Okay, so this ratio is not very good. But if the company has not taken any debt, in that case, price to sales would be very close to EV to sales. Okay, and the price to sales will have a great significance because the company doesn't have any debt. So the enterprise value will be very close to the market cap. Fine. So, price to sales has an inherent defect because the numerator and denominator are not consistent with each other. They different. They um, reflect different, stakeholders. Price reflects the equity shareholders. Sales is basically using in the entire resources. The money company has taken loan also. The company is using equity capital. All that money is being used for making sales, because the company has bought all the assets by using all the resources which it has a stake and which they have taken either from the shareholders or by taking, loan from the banks or issuing debentures. So the second metric is a much better way to look at, because they are reflecting the same. So can you tell me now how the EV to sales is better than price to sales? Anyone? Now, in light of my understanding, can you now tell me why, EV to sales is a better matrix than price to sales? Anyone? Shweta, are you there?
Yes, sir.
So tell me why, the price to sales is a better matrix, or which is better, the price to sales or enterprise value to sales? First of all, Vrinda, which one is better, price to sales or enterprise value to sales? If we have to value a company, so we are looking at various, relative valuation techniques. So we are looking at various ratios and trying to find whether the company is undervalued or overvalued. So which is a better metrics, enterprise to value to sales or price to sales? Vrinda?
So I think it's price to sales.
Anji, which one?
Price to sales.
No, but I explained it is not the case. Zubin,
Yes, sir.
which one is better?
So it's enterprise value to sales because the numerator and denominator are more consistent. Since sales are coming not just from the equity but from all the operating assets, that is equity and debt.
Yeah, yeah, absolutely right. So, again, Shweta and Vrinda and others who are not listening, so please listen. These are very important topic, and it will, take your level very high if you understand what I'm saying. Okay, so please be attentive, because I said that enterprise value to sales is a better metric than price to sales, because the numerator and denominator which we are using for calculating these ratios, they have to be consistent. But when we take enterprise value to sales, the numerator and denominator are reflecting, all the resources of the company. Enterprise value means all the assets of the company, and sales is also, being done by the company using all the assets of the company. Whatever, sales the company is doing, they are using all the plant, machinery, equipment, everything, whether it has been bought through the equity shareholders' money or because of loan. So when we are making a ratio, the both should have a they should be consistent. Of course, we use price to sales as well as enterprise value to sales, both of them in valuation, but it is always better to go for enterprise value to sale, because that would be giving you a better handle. Okay, now we come to enterprise value upon EBITDA. Okay, so enterprise value upon EBITDA, enterprise value upon EBITDA. So I take enterprise value and divide by EBITDA. So it is 19.4. Okay. Enterprise value. So company is trading 19 times or 19 and a half time compared to its enterprise value. When you look at the profit before, that means the cash profits of the company. Okay. So these ratios are actually EV to sales and price to sales. We have taken only the top line. Okay, some people says that we have, when we are comparing and valuing the company, the more important is the bottom line. Okay, so we should, instead of taking EV to sales, we should look at enterprise value to EBITDA, because it is capturing the profitability of the company. But some people says that the profitability of the companies can be always manipulated. People can use, accountants can use different accounting standards, to their advantage. A very conservative accountant may come up with a different profit than a very liberal accountant, because now we have the very uniform accounting standards which are called IFRS, and India has also implemented in India. So there is very less scope with accountants to manipulate the profits of the company. So now the ratio like EV to EBITDA would be far better compared to what earlier. Maybe in the earlier year, the EV to sales was considered to be much better. So EV to EBITDA is a much better metric because it is taking the assets of the company and comparing with the overall operating profit of the company or the cash profit of the company. Okay, so let's go back to the screener and see whether we are getting the same story here. EV to EBITDA 19.4. Okay, so when we look at here, we get EV to EBITDA is 19.4. So it is matching. So we haven't done any mistake. Okay. Now tell me why EV to EBITDA is important. Okay, why EV to EBITDA is more important than price to sales, or I mean EV to sales. Anyone except Zubain? Shub, Harshil, anyone who was listening, please answer. Why if we have to value a yeah, Harshil, yeah, tell me.
So because EV contains both as all the assets of the firm, that's why I think it's a better metrics than comparing it with the price.
But I'm saying why, how EV to EBITDA is better than EV to sales or EV to uh,
So
price.
because at the end, it tells us how much profit it has generated, the firm has generated.
Anybody else, please, who was listening carefully? Can you answer me? Anyone? Zubin?
Sir, we are interested in the cash profits from the company and comparing it to all the operating assets.
Okay, so I think you also missed my point. I was saying that that when we are looking at the profits of the company, I'm just opening that. So EV to EBITDA, basically, this ratio is the numerator is the entire assets of the company, and the denominator is the profits of the company. Okay, the cash profits. So some people argue that this is a better ratio, and it happens to be the best ratio compared to all the ratios which we have seen so far, because here we are looking the bottom line, okay, and not the top line. So when you are valuing the company, the how much profit the company earns is much a better indicator to understand whether the company is, how should it be valued in the market. So just looking at the top line, we can't say the company is good and we should buy that company's shares. Okay. So we should look at the bottom line. Okay. So this ratio is capturing the and being created out of the bottom line, which is the EBITDA is nothing but the bottom line, the profit before interest, depreciation, and amortization. So this is 19.4. If Eicher Motor was trading, if I ask you one question, okay, if Eicher Motor historical average is 25 EV to EBITDA, okay, now tell me, if it is trading at 19.4 today, is it cheaper compared to the past or is it expensive compared to the past? Anyone? Historically, Eicher Motor was trading 25 at a ratio of 25 EV to EBITDA, but today it is trading at 19.4. Is it trading at discount compared to historical past, or is it trading at premium compared to the historical past? Zubair?
Sir, trading at discount.
It is trading at discount because it's cheaper now. Fine. But it may happen that the entire market is cheaper. So sometimes we have to look actually on the basis of, because maybe about a month back or a year back, but we are talking about historical. Historical means last 3 years, okay? So which means that if it's trading at around average of 25 and it's trading at 19.4, definitely it's trading at a discount compared to the past. Okay. Then of course we can make EV to EBIT also. So EV to EBIT. So we do EV and then divide by EBIT. Fine. So it comes to 21.9. So this is also, the companies which don't employ so much of, capital assets. Okay. Now this ratio becomes more relevant for them because here we are taking operating profit. So instead of taking the cash profit, now we are taking the operating profit. Okay. So this ratio is also equally important. So when we are looking at the company which is expensive or cheap, then last ratio is PE to this thing. So which means earning divided by the, sorry, P is basically, what is the formula? P, that is the market cap divided by the earnings. That is the, the market price per share divided by EPS, which is nothing but market cap divided by the earning. We get the same thing. So it is 29.1. Okay. So this company is currently trading at 29 times than its earning per share. Let us look at, the screener and find out the P ratio. P ratio was 29.1. Okay. So we are getting the same. Okay. Fine. So this is what we have done. Okay, 29.1. Now you have to look it from here also. Go to profit loss account. Okay, and which is, I'm just going to explain that later. Fine. So let me just go back here. Okay. So you do the same thing for all of the other companies: Maruti, Tata Motors, Mahindra, Ashok Leyland. Okay. Do for the rest of the companies. Okay. Fine. And I'll give you time to do that. It's 12:46, and how much time do you require, Zubain and all company? कितने टाइम में कर लोगे सबका? Half an hour? How much?
Sir, that should be enough.
Huh?
Sir, it should be enough.
So half an hour. It's 12:46. So around 1:20. Okay. Complete this exercise. So do it, and we will meet thereafter. And anybody who has done, he can just put the numbers on the screen. Okay, maybe Zubain or maybe anyone. Okay, just show the numbers to me. At I may ask anyone rather. It's not Zubain. I may ask anyone to show the numbers. Okay, any of you. So do it, please. Start doing it. So after 10 minutes, I'll be coming again. So if you have any questions, you can ask me. So I'll be there right back at 1 o'clock. Okay, so keep doing it yourself.